feel like I've been thinking about working with investors for as long as I can remember. My name is Greg Fisher. I'm the founder and chief investment officer of Gerstein Fisher. When I was 13, I started working with my uncle, Ed Gerstein, in Brooklyn, helping people in the neighborhood prepare and manage their tax returns.
Hey, what's going on?
At that time, he was doing 700 or 800 tax returns a year by hand. I recognized pretty early on that there was an opportunity to bring technology to our family accounting business to make it more efficient and also to organize all the data in a way that we could learn something meaningful to be able to help our clients make better decisions. One by one, I was identifying clients who were working with all the major investment firms, and what I found was that their results after taxes just didn't seem to be as good as they should be. They were trying to decide after the fact as to whether or not they were making good financial decisions. And I started seeing patterns that suggested they weren't. And that's how Gerstein Fisher started.
Behavioral finance you can see as an exercise in biases. We don't just make mistakes, but we make mistakes in the same way.
I wanted to build an organization that would manage assets for individual investors in a way that would embrace more of the academic side of finance, quantitative methods, science, math, to create an investment model where you're searching for sources of risk that earn returns for investors as opposed to finding mispriced securities.
We want to regress that value on some alpha.
I spent a lot of time in my office in Austin trying to develop my broad approach to how our portfolio strategy should be implemented. And then we sit down for 3-4 hours and say, okay, how are we going to actually do this? And these guys really know what they're doing.
Very rarely can professional investors call the market in any way, either in terms of predicting which sectors will do well, which companies will do well, and what will happen to the market as a whole.
The way we invest is looking at risks. So when we add something to a client's portfolio, we look at the risk that it adds and the expected return that it can bring.
Now add to that life events that occur: death, birth, marriage, divorce, buying a home, job change. All of these real life events impact investors' ability to stay strategically invested over the long run. So although one element is to design a great investment strategy tilted to specific risks, none of that will work for the investor if they're not able to maintain that strategy through a lot of different market events and life events that could derail the plan.
Traders are standing there watching in amazement.
Major financial institutions have teetered on the edge of collapse, and some have failed. We're in the midst of a serious financial crisis.
There were days where the market was down 5% in a day.
I remember coming home and talking to my wife about how difficult it was to navigate through this and help people make choices about their future when we couldn't predict the future any better than anyone else could. All of our competitors were running for the exits, laying off their staff, downsizing, and fighting for survival. It's tempting to make choices about your strategy when the risk shows up or when emotion sets in. But I guess that's the point. We built our system around the philosophy that markets price risk properly.
The market goes down 5%, that presents a rebalancing opportunity. We're below our target in equities, we're going to buy more equities. Even when the world was saying, maybe you shouldn't do this anymore.
That was also the moment where we needed to make some decisions about the future of our firm, where I felt that it was important that we did exactly what we were advising our clients to do, which is to embrace risk as opposed to run from it.
The acid test of any discipline is how does it work under pressure? And one of the things that's impressive about Gerstein Fisher is they have the discipline that some of the best investors have.
We almost tripled our office space. We invested in the Gerstein Fisher Research Center and created some of our investment strategies tilted to the very risks that investors were running from. So welcome everyone, and thank you so much for joining us tonight. One of our firmly held convictions at Gerstein Fisher is that an educated investor is a better investor, and we take that part of our job very seriously. We know who the people we're working for are.
Hey guys. Hello, young man. How are you? Thank you for coming. You guys know each other, right? Steve, Jay?
We understand them. We understand what drives them. And as a result of that, we're able to help the people we work with make better decisions along the way.
The most rewarding thing to me is a client having gained an insight that's going to really improve their lives.
When you're managing a large pool of portfolios and you're using a lot of technology to do it, it becomes easy to make decisions based on numbers and not people. What's at the core of Gerstein Fisher is that every individual here has client interaction. It's impossible to forget why you're doing it and why you're here when you have that client whose retirement is on the line, whose child's education is on the line. And that's what's really important.
There are some differences between where we are today and where I was in the basement in Brooklyn, but the core principles are the same. Here we are 20 years later, and it's incredible when I walk into the office every day and I see all these people together to watch the investors we've worked with get through 2 financial crises, 2 50% market corrections, all the challenges in their lives that we've seen, to have them say we were able to help them is really the fruits of our labor.